Should you invest or exit current market? The cryptocurrency market is on the verge of collapsing. Bitcoin, Ethereum, BNB, and other major currencies have seen their prices plummet by as much as 30% in the last 24 hours, owing to concerns about the climate impact of digital coins and additional comments from Elon Musk and the Chinese government. Is now a good time to invest in cryptocurrency as its value continues to fall? Well, let's find out. Welcome to Crypto Talks. In today's video, we will discuss the current state of the cryptocurrency market and whether or not you should invest in it. So watch the video till the very end. Cryptocurrencies have had a rough spring, with Bitcoin and other assets falling more than 50% from their all-time highs in 2021. On May 9th, when the biggest crypto crash in recent memory happened, the losses were especially bad. So why are cryptos going down? Interest rates, inflation, and other macroeconomic factors can affect how confident people feel about putting their money into risky alternative assets. This, in turn, can affect how the price of crypto moves. When interest rates go up, savings accounts become more appealing, and some people may feel more comfortable putting their money somewhere they can get a predictable return. When prices drop quickly, like they did in May 2022, it can add to the pressure on the market by forcing some investors to get cash out of their investments so they can pay other bills. If you're worried that the prices of cryptocurrencies will keep going down, it might seem like a good idea to sell your investments now and save what you can. But that is sometimes a risky thing to do. No one knows for sure what will happen on the cryptocurrency market. Prices could fall even more or go back up soon. This sector is known for its volatility, and crypto has a long history of sharp ups and downs. And so far, the long-term trend of the market has been mostly up. If you sell now, there's a chance that prices will go up again soon, and you won't be able to get those gains. Also, if you put money into an investment in the last few months, taking it out now will probably mean you're selling at a loss. Since November, the value of major cryptocurrencies like Bitcoin and Ethereum has dropped by almost half. If you take your money out of your investments now, you'll sell them for about half of what you paid for them. This will lock in big losses. One of the most important rules to remember when investing in stocks or crypto is that you can't lose anything as long as you keep your money in the market. Even if your investments lose 99% of their value, you won't lose a dime if the prices go back up, as long as you don't sell during the drop. No one knows for sure if crypto will come back, but this kind of volatility is pretty typical for the market. Several times, the price of Bitcoin dropped by more than 80%, and Ethereum once lost close to 95% of its value over the course of a year. Compared to that, the recent drop of nearly 50% isn't that bad. The best thing you can do may be to just keep your investments as they are. In the future, the crypto market could get even worse, and your portfolio could fall even more. But if you try to keep your mind on the long term and don't get caught up in the day-to-day changes in the market, you might be able to benefit from the recovery in the long run. The best way to keep your money safe during times of volatility is to keep your investments. However, there are other steps that you can take to protect your money even more. One thing you should do is to make sure the rest of your portfolio is well balanced. You should only have a small amount of your portfolio in crypto. Your best crypto stake may depend on things like your age, how you feel about taking risks, and how much you know about blockchain technologies. If you've been putting too much money into cryptocurrency, now might be a good time to put more money into other stocks in your portfolio. Also, make sure that every stock in your portfolio is a good investment for the long term. Crypto is already a risky investment, and if many of your stocks are also risky, your portfolio may not be as risk-tolerant as it could be. If you put your money into good companies, you have a better chance of making it through market downturns. Right now, the cryptocurrency market is scary. But that doesn't mean you have to sell your investments. By keeping them for a long time and focusing on the far future, your portfolio is more likely to survive even the most volatile times. Personal finance experts often say that a single asset, like a coin or a company stock, should only be a sprinkle on top of a vanilla portfolio of stocks, bonds, and mutual funds that will help you reach your long-term financial goals. If crypto is the only thing you invest in, you're probably taking on way too much risk, says Daniel. Even in the part of your portfolio that is dedicated to crypto, it can be a good idea to spread out your investments. There are a lot of different digital currencies, and doing research and buying a few crypto assets that you think will do well can be helpful. If people still think of cryptocurrency as the Wild West of finance, the 2022 bear market will change their minds. Financial regulators around the world are already looking into stablecoins, which are privately issued cryptocurrencies that are tied to the US dollar and other major currencies. People compare stablecoins to digital versions of the wildcat banks of the Old West. Customers think they can cash in their dollars whenever they want, but the banks don't have nearly enough reserves to do that. It's a good comparison, but when you look at how stablecoins actually work, it doesn't make sense. Still, the end result is the same. Customers have to trust a private company, not the full faith and credit of the US government, to back their dollars. But private companies can cover shortfalls by taxing, spending, and printing more money. Once one of them fails, there is a much higher chance of a financial panic. US regulators have already started getting feedback on a regulatory framework for banks that want to put Bitcoin in their reserves and companies working on crypto-based financial products. Even more has been done in other countries. They have also tried to get speculators to use derivatives and other financial products. Wall Street agreed gladly. Now that there are so many paper-traded Bitcoin products, you no longer need a Bitcoin wallet or custody platform if all you want to do is bet on the price of Bitcoin. You can just buy ETFs, options, or futures contracts. Speculators don't have to deal with the spot market, and institutions don't have to keep track of Bitcoin. Bitcoin will have to earn its price as more money moves into investments that are traded on paper instead of the spot markets. It can't depend on institutions because institutions will buy a fund and not actual Bitcoin. Some people think that retail interest will make up the difference, but not when the market is down. As they did during each of Bitcoin's 3 previous bear markets, people will get bored. But unlike the last 3 bear markets, people won't have to buy Bitcoin to get involved in the Bitcoin market. There will still be a lot of people buying Bitcoin, but the 13-year phase of speculation will be over. No matter what, a new phase will start. What kind of phase will it be? Developers will keep innovating. Some platforms will change, stay around, and grow. Most altcoins will become useless because of projects like Lightning, RSK, and Sovereign. As it did in each of the 3 previous bear markets, the technology will improve while the price falls for months. Speculators will either leave or only trade derivatives. Demand must come from people who want Bitcoin, not from people who want to use Bitcoin to get more money from their government. This week, the crypto crash taught us a lot. Even the best altcoins like Terra can lose value overnight and have a hard time staying alive. The idea behind decentralized algorithm stablecoins like Terra USD is interesting, but it needs a better plan. When there is a crisis, centralized stablecoins like Tether, USDT, which are often criticized for not having enough cash on hand, look helpless. This week will be remembered as a turning point in the crypto industry, and crypto fans need to realize that there is still a lot of work to do. Alright everyone, this brings us to the end of our video. I hope you guys enjoyed it and got some fresh out of it. Make sure to subscribe, give the video a big thumbs up, and don't forget to ring the bell icon for more videos like this one.